My name is Dorrit Erzmoneit and I work for Hublot Associates. We are a boutique consultancy with a passion to boost asset management, marketing and sales. We interviewed over 200 asset managers and thus developed models and scans to help distribution and marketing teams to be more effective and to be more impactful. Since we work in various, especially continental European markets, we decided to develop market fact sheets, which give teams that are not that familiar with certain markets a quick overview about the market size, the regulator, assets inflows, etc. And today I would like to talk about the German market. I grew up in Germany and I will also share a few personal experiences, what it was like growing up and why the German investment behavior, the retail investment behavior, might be different than the Anglo-Saxon one. But let's start with some key figures. Germany's population is over 80 million. That is, if we exclude Russia, the biggest in Europe. With assets just under 3 trillion euros, Germany is the largest market for UCITS and alternative investments. Since 2013, it is the second fastest growing market after Italy, if we look at the 5 largest fund markets. The open-ended investment fund segment last year was led by Spezialfonds. So last year is 2018, followed by open-ended retail funds and then discretionary mandates. Spezialfonds benefit from institutional investor groups since assets for retirement benefit schemes have been on the rise. Insurance companies appear to be the largest investor group in terms of volume for those funds. But now let's look at the retail fund sales. Balanced funds are still topping the sales charts. Last year, so 2018, they raised 21.6 billion euros net. And the investor focus was on products that invested equally in bonds and equity. And here I would like to share some personal views as a German. I do think that balanced fund fits the German investor mentality quite well. German households save about 10% of their disposable income. That is twice as much as Anglo-Saxons. And home ownership, by contrast, is quite low, not just by Anglo-Saxon standards, but by international standards as well. This might even explain why Germans sometimes see economic events with a slightly different view. They are savers, they are not investors. So when interest rates are low, the German saver will feel cheated or robbed. And they will not look at it like a borrower, for example, a home buyer. So keep that in mind. It's very, very, very important and of course very different on how you view certain events. Quite a few Germans still put their money into savings accounts, and even if you can't find the interest paid with a magnifying glass, they are still doing it because what they might not take into consideration is inflation and tax. Another popular-ish investment vehicle to note are life insurances. Germany has more capital life policies than people living in Germany. Again, you cannot compare these to the Anglo-Saxon model. Many invested in the so-called capital life insurance policy. They pay money if the policyholder passes away. However, they are really seen as savings account or pension plans. These policies accumulate capital until retirement and then pay kind of an annuity even when the policyholder doesn't die. Some part of the policy is guaranteed by the insurer, but not all. And since interest rates fell almost to zero, the policyholders start to realize that their payout won't be as big as they had hoped for. So that's pretty bleak, and there's room, I think, for education. Um, you know, explain to a German investor that this might not be the best vehicle. However, shifting behavior and especially habits isn't easy. I think saving is rather a habit as well. Uh, as a little child, when I grew up, I had a Sparschwein. This is a Sparschwein, it's a piggy bank. And when I entered first grade, the local savings bank issued a little blue booklet to me, which was a savings book. So saving was really encouraged. And this is something you have to keep in mind when you talk to a German investor. Another interesting thing to mention about the German market, this has nothing to do with the piggy banks now. I'm sometimes come across things like, oh, the Germans don't like digital stuff. And I then wonder, where might this be going? I mean, I'm talking very often to marketers, and it seems that the question is it worthwhile to run campaigns? Of course. You must not mix up online and campaigns with data privacy. What the Germans treasure is data privacy, and that's different. I mean, it comes into play if you think of digital banking on your smartphone. There are other European markets might be a lot more open to do that than the German investor or saver. But when it comes to marketing, please use LinkedIn, run your campaigns, make sure you're effective, of course. And if you're not quite sure how to do that, then talk to us. That's what we are there for. On another note, if you are interested to learn more about the German market or would like to get some other fact sheets from us, please send us an email. Just drop us a line to info@hoblotassociates.com with the reference fact sheet Germany. We are happy to mail this to you. This is it for now. Thank you for watching, and tschüss.